fair value gap breaks down. The 3961.75 level also. This is an old daily low, as you can see here. That low, if you don't know what that is drop a horizontal line on 3961.75 and go back up to a daily chart and look back a couple days and you'll see where that is. That's an old daily low. I mentioned that in a tweet, told everybody to look for that, and it went down into it here. And I did some shorts up in here and covered below that. And then you can watch that recording on Twitter, by the way. But here's another signal forming around a daily low. And folks that say like, oh, well, it's just classic support and resistance. You know, it's nothing new under the sun with ICT. That's bogus. Just because it goes back up to that old daily low, and if I'm bearish, that's not enough for me. Like I have to see something like this fair value gap. I got to see something like an institutional order flow or a bearish breaker. You know, if I don't have a PD array that the algorithm is going to refer to, just because we're below an old daily low and it returns back to it doesn't mean it's a sell. Just because we went above an old high and trade back down to it, that's not necessarily a support or a high probability long entry. So the folks that are argumentative about what they see me show, even with executions, which they'll call cherry picked, which beyond me, I don't know how they could say that because I'm outlining it in tweets, only one-sided, and then executing with the very levels I'm calling with the logic that I'm teaching you for free. They're stuck, okay? And it's fun. My feelings are not hurt by this, but I enjoy seeing it because it's denial. Denial, that's all it is. And they can't accept it, which I take as a compliment. But you can't just simply say that what I'm showing you is support and resistance. I'm showing you what makes support and resistance what it is in reality. Imbalances, fair value gaps that get traded to, and when they return back to them later on, that's a real support and resistance level. It's finite. It's not a zone, like a supply and demand zone. It's a very specific level. And there has to be logic, and it has to occur around a specific time. When this occurs here with this fair value gap, and it trades up into it here, what time of day is it? It's during the final hour of trading, between 3 p.m. and 4:15. So this run here, opening price, extending out in time. This is a Judas swing, trades up into a fair value gap, breaks down. Fair value gap, trades up into it, last hour of the day, displacement at a old daily low. There's lots of liquidity that comes in around daily highs and lows. So one of the best things you can do is use your daily chart and use daily highs and lows over the last 3 days. So count today as day one. Your trading day today, whatever that day is, that's day one. Yesterday, whether it be yesterday's trading day or last Friday, if it's like, for instance, if it was, say you're trading on a Tuesday, there's a previous day, that would be day 2 on Monday, and then Friday would be day 3. And if you're trading like today, Wednesday's day 1, that's the trade day you're trading in. You look back to Tuesday, that's day 2, and you look back to Monday, that's day 3. So you look back for daily highs and lows for algorithmic trading. So in short, today, whatever day it would be that you'd be entering the trade, that's day 1. Yesterday is day 2, and the day before yesterday, whether it be going into the previous week, Friday, or whatever the previous day is, that's day 3. You have the highest high and the lowest low of that total range. You have the individual highs and the individual lows. That is a dynamic matrix of liquidity that you will never exhaust for future trade setups, because this is brilliant. You can see them forming all the time. And this is what it kind of looks like right in here. This is a model. This is a specific PD array aligned with an old daily low while bearish. Time of day, last hour trading. So the market runs up, fakes people out, think it's going to low. It's been put in, market breaks down, returns back to a fair value gap, sells off aggressively. Look at the bodies of the candle respecting the fair value gap high. Folks, that's algorithmic. That right there, that's a signature proving what I'm teaching you, that price engine is delivering price based on these very things I have codified. You are seeing the evidence of it. It's undeniable. Then it drifts. The high is the exact high of the fair value gap. The high of this candle is the exact high of the fair value gap. It breaks. Fair value gap. Trades down. Midpoint of the fair value gap, high and low. Consequent encroachment. It reacts to that. Back up to what? The fair value gap. Stops midpoint of that. Consequent encroachment. Trades lower. Comes right back up. Where's the stop? At the bottom of the fair value gap, which is this candle's high. Perfectly. It stops in the midpoint. It stops at the low point. Not some ambiguous level in some supposed supply zone. I am teaching you technical science, not retail mumbo jumbo.